It's time for a stock of the hour, and one of the biggest point drags in each of the major averages today, Apple. Shares lower on that rare downgrade to neutral from buy. This at Nomura Instinet. Now, over the year, shares have been up more than 50%. So what does this mean? Abigail Doolittle joins us. Should we be concerned? I don't know if that's the right word.
You know, it's interesting, Vonnie. Perhaps not so much because of the downgrade, but this downgrade does remind me of one back in July of 2015 when there was an analyst. All of the street was bullish on Apple, but there was an analyst who did downgrade shares, saying that he thought that there was a potential that the iPhone could disappoint. That was the iPhone 6S, I believe, that could disappoint. Lo and behold, that was before the big drop in revenues in early 2016. Something similar may be setting up because the analyst over at Nomura who downgraded shares saying that the iPhone supercycle is priced in. Let's hop into the Bloomberg here and take a look at the financial analysis function, because what we're going to see, when I first saw it, absolutely stunned me. So up here are the revenues. We see 20% year-over-year growth for fiscal year 2018, but check out fiscal year 2019, 2.2% year-over-year growth. So a really stunning drop in growth, or the degree of growth. And then for earnings, something similar, 25.4% growth down to 6% growth. So if you look ahead, these numbers are a lot less, and this is a look at the earnings lumpiness, if you will, and certainly dropping a bit going into, again, 2019. That could be a concern going ahead for investors if they're not able to somehow beef up the situation for 2019.
And Abigail, what likely happens then when 2019 comes more into focus?
Well, that is certainly a big question, because in my experience back in 2012, when there was an upgrade cycle, and then as the street started to take a look at margins, the stock was hit, and then we saw something similar in 2015 and 2016. So now we could see something similar. Let's hop back into the Bloomberg and take a look at a longer term chart. This is #BTV 7997, and we're looking at roughly a 10-year chart here in 2007 when the first iPhone was introduced, a big pop up and then a decline. Some of that certainly could be the financial crisis, but here we have another upgrade cycle, and the point is, Mark, we see these rallies and then these declines. So we see this rally and a decline, and it's worth noting that while Apple is trading at a discount to the S&P 500 on a multiple basis, it's actually trading at a 36% premium to the group, a historical high. So there is some reason to think that maybe this 50% year-to-date rally for Apple is going to cool off a bit.